Hello investors. The month of Jan has been a very good month for your portfolio. The index was down maybe a negative 0.1 or so, but your index was up by more than 3%, well upward of that. And it's very, very satisfying because in a market that's done nothing, if you have that kind of spurt in your portfolio, it feels good. And what's more important was that this was a month where you saw that the frontline stocks or the index stocks really didn't do much, which explains for a flat index. However, there was a very good up move in the mid-cap space. And the ability of the portfolio to even participate when the mid-cap and small caps were doing well is demonstration of the fact that we have an all-weather portfolio. Even more satisfying for me is that a lot of quarterly numbers have come out in this month. Mostly about 70-80% of our portfolio stocks results are out, and they are very, very satisfying. What is happening is that because of the slowdown in the economy, the number of companies that are doing well are very few. So the model that we run for your portfolio, which is based on fundamentals, shows us that this number is shrinking. That is a reality. That is a reflection of the slowdown. So we have very shrewdly or smartly moved our portfolio to these spaces because as an investor, ultimately, my job is to do the best with what the environment offers. And as I said, good numbers in this category or spaces that we are in is a reflection of that. So all in all, a satisfying month. Going ahead, Feb started with a bit of jiggle, or I would say volatility, thanks to the budget. The immediate response was that the market was expecting a lot and nothing much came about. So most people termed it as an opportunity loss. But I think over the weekend, as nerves have settled, people have read the fine print. The first thought that we feel is that it's a credible budget. The numbers that have been put out look true and fair. In other words, they look achievable. Very often the headlines are good, the talk is nice, but when you read the fine print, you realize that there is a lot of devil in the detail. So all in all, we feel firstly the numbers are credible. Second is that from the communications that we've heard over the weekend, it's clear that the government thinks that the only time to do policy initiatives to revive the economy is not the budget, but it's all year round. And a reflection for that was last year. The single biggest trigger for our markets, or the single biggest economic measure, was the cut in direct taxes. And that happened in an off-budget day. In fact, that one act was equal to 5 budgets put together. So the confidence that we have is that the government is proactive, the intentions are good, they will hopefully get it right at some point in time. And policies are not just restricted to the budget, but it's an ongoing affair. Of course, nothing dramatic came about. So the hope that the market had of a V-shaped recovery in the economy is, I think, put to rest. What you may at best have is an elongated U-shaped recovery. And that's what we are experiencing right now. In this state, what you will find is that very slowly there will be an improvement. There will be gradual, calibrated improvement. And again, as I said, that will reflect in the stocks that we monitor for you, in the kind of numbers that we'll get. And we will be able to hopefully navigate or fine-tune your portfolio based on the newer sectors and newer themes that are emerging. So all in all, I said in 3 days, I think the budget is rested and dusted, and now we have to move on. The big issue that I think that will linger for the month ahead is the whole coronavirus. The reason why I say this will linger on is because this is an event where we are unable to quantify things. We really don't know how far it will go. At the moment, things look contained because most of the flu cases or the deaths that are there are in China. And many countries, including India, have sort of sealed their borders from inflow of people from that country. So I think in that sense, it is contained. It's going to have a lot of damage in China, the human toll, and I also think it is going to have a massive economic toll. This will, I think, create problems in China, but for sometimes for a country like India, it can also be an opportunity. Of course, it's a sadistic thought because we are trying to look for opportunities when there's pain. But as I said, that is the reality of this market. So going ahead, as I said, nobody can quantify, nobody can know what the impact of this coronavirus is going to have on globe, on markets, on people. But it's important to be alert, and we are very, very sharply looking out for what is going to be the impact on this, on the macro, and more important, the micro of our companies. And life goes on. We continue to ride the trend. Hopefully, there would not be much activity in the portfolio because most stocks seem to have done a great job in terms of the fundamentals, in terms of the quantitative parameters we look at. As and when we find that something is lagging or there are some laggards, we will make an adjustment or a switch, which we do because at all points in time, we are focused on your portfolio. On that theme, I leave you for this month and wish you continue riding the trend. Thank you.